Hello everyone, welcome to another episode on Stockertim. Welcome to Stockertim, the investors channel. I'm going to actually be looking at Webull stock. Webull, the one of the most popular stock trading and investment platform in the world, has now been officially listed on the NASDAQ stock exchange, on the NASDAQ last week Friday. Towards the end of the trading hours, Webull stock actually rallied after a completion of the listing through a special purpose acquisition company, SPAC. So it wasn't the usual IPO or direct listing that was done, but finally Webull is now part of the other investment trading platforms that are now listed on the on Wall Street. So on this episode, I will just basically analyze what this company is about, if this company is actually worth buying or selling. Is this a stock to actually own for the long haul, or is this a stock that might not necessarily perform as expected, coming into this market when we have a bit of uncertainty, just to put it mildly. This stock could actually see one of the most interesting times on Wall Street. So join me. Just before I go ahead, please subscribe to our channel if you haven't subscribed. Put on the notification bell if you haven't, and also please give this video a like because more people will get to see this video. Just before I also get into this, do your due diligence or consult your financial advisor before making any decision, because any information shared on this channel is for education and information purpose only. So I will be getting into Webull stock now, so that we can actually see what Webull actually has for shareholders and investors looking to cash in into this opportunity. Join me. So Webull actually merged with another company because Webull didn't actually do initial public offering or a direct listing. Basically, Webull merged with a shell company that is just listed on NASDAQ, and those shell companies actually look for other companies and actual companies that are existing, that are already trading, that they can actually merge and help them get into the market in an easy way. There are so many advantages for this. So number one, the company that actually wants to list on the market spends less or little funds or money on the listing, the IPO roadshow, the paying the investment banker. Secondly, the company also has a very easy way to list on the market with less scrutiny, because there is a blank check company that is already listed on the NASDAQ. They are just merging through a merger to actually finalize that transaction. So basically, that was what Webull actually did. This merger was actually expected to finish towards the middle of the year, but this has been fast tracked, and as of last Friday, Webull is now listed under the NASDAQ stock exchange, ticker symbol BULL, Bull. So the merger was a $7.3 billion merger transaction with SK Growth Opportunities Corporation. The company is listed as Webull Corporation ordinary shares, and now officially Webull is now in the market. So as an investor, just to cut to the chase, what exactly has Webull got to offer? Yes, the company is quite popular in the trading, the retail investor community, just like Robinhood and some other brokerage platforms. But what has Webull really has to offer as an investor, or offer you as an investment? Is this something that you might just have to pass, or you might just not necessarily pay attention to? So I'm going to use this very short episode to actually explain what exactly is going on. So post-merger, after this merger, which has now been done, Webull is expected to have a total of $565 million in cash. So, which is not too much, but it's quite significant for a stockbroking platform, for a trading platform, because with this cash, Webull could as well use just about $100 million to acquire smaller brokerages across the world, because Webull has that global spread. That gives them the opportunity to actually scale the business, to also expand the business into more territories, which actually increase their transaction flows, increase the fees they get, the take rates for the business, which is more or less like a tailwind for this business. Having this kind of cash as a fintech company that actually allows retail investors to actually trade in a more professional way is not too bad. It's actually very good for them. So, over 100 million will be raised. This 100 million will actually add to the cash haul that the company has. Over 100 million will be raised through that transaction that has already taken place. So we are actually looking at Webull in hindsight. The structure of the business will actually, the ownership structure, existing shareholders will actually retain about 98%. So the float, the actual amount of shares, the number of shares that has been put into the market is quite very, very tiny. So you expect that this stock can actually move very fast to the upside and very fast to the downside, because the shares that are actually available for retail investors or any other person to buy after this transaction is quite very minimal. And that's why I'm going to show you a chart of what happened to this stock after that first hour of trading was actually executed. I'm going to show you, and it also color my opinion and my personal perspective about Webull. So it's actually a stock that the amount of shares that is actually there for people to actually trade here and there is very tiny, and some owners of Webull actually own a huge chunk of this business, virtually almost everything. And the challenge is, if they offload the stock or their holdings, which they're actually going to do in the short or medium term, not even in the long term, it's actually more of concern for me as an investor, or for anyone looking to invest in Webull. So Webull, yes, one of the advantage, added to the fact that they have some cash that they've now raised. Webull has that global footprint. They actually have more presence in more markets than even Robinhood. Robinhood seems to have a whole lot more customers, but Webull seems to actually, they have access to more markets, more customers, more traders, more retail investors, and this cash that they have can actually give them the opportunity. Listing on the NASDAQ as well is also a very good opportunity. Profitable wise, less information has been shared about the profit of this company, but according to some of the disclosures that I have access to, this company is already a EBITDA, which is earning before interest, tax, and depreciation and amortization. So all of the expenses, all of the taxes, interest they pay on loans and all of that, if you remove that, before all of that, before you remove all of that, it shows that the business is already profitable. But what this actually means is that the business is not net income profitable. It's not net income profitable, because EBITDA is before you remove before you remove interest, taxes, depreciation, amortization, and all that. That's what you have. So we don't necessarily know what exactly is the profitable calendar for Webull. How many years do they want to get there? Robinhood, which is a much more bigger and much more perhaps popular competitor, is already profitable. They have so much in cash, more than 10 times what Webull actually has in cash. So let's see when the veil is properly lifted rather, and the Webull will now be doing quarterly report. We expect that the first quarter results this year has to be released. That's when you actually get to see more information about this company before you make that decision, or you could actually make the decision depending on your own strategy. But I'm actually going to explain what I think I'll be doing with this. So key competitors, like I said, Robinhood, Charles Schwab, and Fidelity. These 4 companies actually they are actually there to give Webull a run for their money. Robinhood seems to be very, very much aggressive in marketing and branding, and also the kind of diversification of Robinhood's business is a bit more fluid. They are a bit more aggressive to the upside in innovation. They have the gold credit card. They're also looking to actually go into full-fledged banking of sorts for some of their premium customers. Robinhood also has access to much more product diversity, so betting, spreads, options. Yeah, Webull has a whole lot of this, but they are not as diverse as what Robinhood actually offers. And so when you look at the mix of that competition, it seems Webull actually has more to worry about Robinhood compared to Charles Schwab and Fidelity, because those are the legacy stockbrokers that are actually very popular, and they are actually losing some ground to the likes of Robinhood and perhaps Webull. So Webull has much more to contend with, looking at Robinhood and the kind of aggressiveness that Robinhood is actually using. So for me, Webull hasn't shown that strength to withstand Robinhood's approach, but let's see whether going public will actually give them the opportunity to do that. So some of the risks that you might also want to consider is the fact that Webull has links with China. The founder, despite the fact that this company is based in St. Petersburg in Florida in the US, there is still that fact that because this company is much more exposed to Hong Kong and some part of some part of China, this company will actually have some overhang when it comes to regulatory scrutiny and all that. So for me, this is not really a major issue, because to an extent, it's just like Zoom. Zoom is still an American company despite having a Chinese founder and all that. So for me, this is not too much of a big deal, because Webull US is totally different from Webull in Hong Kong or Singapore or wherever. So for me, it's not really much of a big deal. It's just something for you to actually know. So I'm going to show you the chart to actually let you know what actually happened on Friday when the stock officially went into trading as Webull as a company. Come with me. So like I said, on Friday, Webull stock went trading officially as Webull Corporation, ordinary shares. You could see what happened. That same day, the stock went down by about $2.75. It traded around $13.25. However, immediately in the after hours, when the whole market realized that Webull is now officially trading, this stock surged by over 102%. The stock has now doubled in price, in value, in the after hours of trading. It is likely that today might actually see perhaps close to another 50 to 60% upside. Why? Because the float of this stock is very, very small. Like I said in the earlier part of my analysis, the existing shareholders actually own about 98 odd percent, and it is just about 2% that is left for trading, for people to actually buy based on the ownership structure of this business. So I expect that this stock will actually also see a meme sort of trading, it might actually get very popular in the Reddit forums, on stock trades, on X, and also on the financial social media. So I don't expect that this stock will actually go down in the short term. What I expect is that in the next 3 to 6 months, when Webull starts sharing more financial information, we are likely to see this stock actually come down significantly. Also, I'll also let you understand that SPAC have, they've garnered a very negative outlook. A whole lot of SPAC companies that have been listed, companies that listed using SPAC, which I explained, many of them are actually trading far below what they actually listed when they came in through the SPAC journey. Some of them have lost close to about 90, 60, 70, some even nearly 100%. Look at Lucid today. Lucid went as high as $50 per share, being valued close to about $50 billion, but Lucid has crashed to almost $2 to $3 as we speak. Yes, the company is now maturing, but just imagine if you have bought Lucid at that $50, $60 range. You could have lost virtually everything you invested. So I will also still say there is still the opportunity to give it some time. Look at what Webull is going to release in terms of the actual data that is well detailed as per the performance of the company. You don't want to actually jump the gun without necessarily seeing what this company has under the hood. Yes, if you want to trade this stock for the short term, but you have to actually be very, very careful because you don't know when we are going to get maybe another headline across the market, the tariff and all that, or even specific to Webull. And we don't also have the specificity of the companies that are actually holding Webull stock as the initial owners of this company. So when they decide to sell, this stock is actually going to come down considerably, and that might actually be the best time to actually buy. For me, trading this as a momentum, it's not a bad idea, but you actually need to actually be very careful so that you don't get the short end of the stick. That's it for me about Webull. I will be bringing you more analysis on new opportunities that are coming into the market. So what do you think about Webull stock? Is it a stock that you want to buy or sell in the medium or short term? Is it a stock you plan to hold? Yes, I know Webull is quite popular. They are quite very, they have that charisma, amongst traders, amongst retail investors who are a bit more savvy. The charts of Webull is quite interesting. And also how the business has expanded across the world is quite interesting as well. So in terms of the tech, the customer service of the business, they are not doing very badly. They are doing very good for themselves. But coming from a private company to a public company is a different ballgame entirely. This is business. This is investment. It has to actually be analyzed in its merits. So what do you think? Do you want to invest in this stock in the short or long term? Let me know in the comments section below. Please share this video, give this video a like, subscribe to our channel, put on the notification bell. Join us on X at Stockertim Live, on TikTok at Stockertim, and on Instagram at Stockertim Live. Thank you so much. I'll see you in the next one. Take care and bye bye.